Miss the self-assessment deadline, and HMRC doesn't care if you owe zero tax. You're getting fined £100 the very next day. Stay late long enough, and that number climbs into the hundreds, then the thousands before interest is even added. If you're self-employed, a landlord, or you've got income HMRC doesn't already tax at source, this video is for you. I'm going to walk you through exactly how the UK self-assessment tax return works, who needs to file, the deadlines you cannot miss, what you can claim, and a major change to how self-employed people and landlords file that's already reshaping the system. No jargon you don't need. Just what matters in the order you need to know it. Let's start with the basics. The UK tax year runs from April 6th to April 5th the following year. You need to file a self-assessment tax return if, during that tax year, any of the following applied to you. You were self-employed as a sole trader and earned more than £1,000. You were a partner in a business partnership. You earned untaxed income from renting out property, savings, investments, or dividends. You earn more than £100,000 in total income. You're liable for the high-income child benefit charge and haven't arranged to pay it another way through your tax code. Or you have foreign income you need to declare. If none of that applies and all your income is taxed through PAYE, you likely don't need to file. But if you're not sure, it's worth checking. The penalty for not registering is the same whether you knew or not. This is the section people come back to rewatch, so let's be precise. If you're filing for the first time, new self-employment or new income to declare, you need to register with HMRC by October 5th, following the end of that tax year. If you're filing a paper tax return, that's due by October 31st. If you're filing online, which is what most people do, your deadline is January 31st the following year. That's also the deadline to pay any tax you owe for that tax year. One thing worth knowing, if you intended to file on paper and missed the October deadline, you can still avoid a penalty by switching to filing online instead, as long as you get it done by January 31st. HMRC's penalties escalate quickly, and they apply even if you don't owe any tax. Miss the January 31st deadline and you get an automatic £100 penalty immediately, regardless of whether you owe anything. Still not filed after 3 months? Daily penalties of £10 kick in, up to a maximum of £900. After 6 months, a further penalty of 5% of the tax due, or £300, whichever is greater. And the same again at 12 months. That's the late filing penalty track. There's a separate late payment penalty track too. 5% of your unpaid tax if it's still outstanding 30 days after the deadline, another 5% at 6 months, and another 5% at 12 months, on top of daily interest that accrues on whatever you owe. These penalties stack, so a return that's a year late with unpaid tax can end up costing well over £1,000 in penalties and interest combined. The takeaway: even if you can't pay what you owe right away, file the return on time. Filing and paying are two separate deadlines, and neither one is forgiving. Before you sit down to file, gather these: your unique taxpayer reference and government gateway login, records of your income, invoices, bank statements, or a P60/P45 if you also had employed income, records of allowable expenses if you're self-employed, details of any savings interest, dividends, or rental income, and records of any pension contributions or gift aid donations, since both can reduce your tax bill. The better your records, the faster this goes, and the less likely you are to miss a deduction you're entitled to. Here's where a lot of people leave money on the table. The personal allowance is currently £12,570, the amount you can earn before paying any income tax at all, and it's been frozen at that level for several years running. Above that, the basic rate of 20% applies up to £50,270. The higher rate of 40% applies up to £125,140, and anything above that is taxed at 45%. If you earn over £100,000, your personal allowance starts to shrink, and by £125,140, it's gone completely. That's a detail a lot of higher earners miss, and it creates an effective marginal tax rate well above 40% in that income band. If you're self-employed, you can deduct legitimate business expenses before tax is calculated, things like equipment, travel for work, a proportion of home office costs, and professional subscriptions. Pension contributions and gift aid donations can also extend your basic rate band, which is a genuinely underused way to reduce a tax bill legally. Now here's the change every self-employed person and landlord needs to know about. Making tax digital for income tax, MTD for ITSA, is mandatory if your total gross income from self-employment and property is over £50,000. Instead of one annual tax return, you'll need to keep digital records and submit quarterly updates to HMRC using compatible software. That threshold is set to drop further over time, first to £30,000, then down to £20,000, so this will eventually apply to most sole traders and landlords. HMRC decides whether you're in scope based on the gross income already reported on your most recent tax return, not a forecast, not an estimate. So if your last filed return shows income over the threshold, you're brought in whether you feel ready or not. If that applies to you, the sensible move is to get compatible software and a process sorted well in advance, not at the last minute. You can absolutely file your own return, and plenty of people do. But an accountant earns their fee in a few specific ways: spotting deductions you'd miss, keeping you on the right side of MTD as it rolls out, avoiding errors that trigger an HMRC inquiry, and simply giving back the hours you'd otherwise spend untangling this yourself. If your situation involves more than one income source, property, or you're approaching the MTD threshold, it's usually the difference between a stressful January and a 5-minute phone call. To recap, know whether you need to file, register by October 5th if you're new to self-assessment, file online by January 31st, and start preparing now if making tax digital applies to you. If you'd rather hand this off to someone who does it every day, that's exactly what we're here for. Get in touch, and let's get your return sorted properly and on time.